Thanks a lot. Welcome everybody, welcome to my webinar. Broadcasting live from Mexico City. This is me myself, Alberto Alvarado. This is my YouTube free channel. You can look it up, typing in the YouTube search box, iiivb Training Room channel. This shows up, you click subscribe. Today is Thursday, February 23rd, 2017, 1 a.m., 8 minutes past the hour, my local time, 7 a.m., 10 minutes past the hour, GMT time. And well, I would like to apologize for yesterday. I was not able to broadcast because I had some urgent personal situation that put me in hospital for some hours. But well, I'm okay now. So, we have a lot of things to talk about. Okay, apparently the crash is having some problems with the audio. By the way, good morning everybody. Good morning Rocas, good morning all the guests, good morning the crash, Christian, good morning Katerina. And well, yesterday was a terrible day for my demo contest account. I mean, I cannot get it worse, you know. The only thing that I could actually do is to put it at 0 at this moment. It was a terrible day. I'm going to explain, going through some the basic and most important aspects on why this happened. And of course, I'm just quitting this account at least for this rest of the week, and I will wait for the next month. Of course, the problem here, as I commented, was in the very first week that the margin call that I had, I simply couldn't overcome, and to put back the account into profitability. The problem when you do that is that you usually need to over leverage even more to run even bigger risks, trying to win this kind of competitions when you have this sort of mistakes. So I simply couldn't make it. And that's something that is related. If you remember, since last month I won the, I guess it was the 15th position. I was commenting that the idea of this trading contest is educational, because of course you can learn a lot of things about the trading logic behind the winners of contests and etc. But the real treasure is when this kind of people that at least once or several times have won a prize in Dukascopy, for example, if they could tell you how they deal with losses, how they manage psychology, how they manage the trades when they are losing, etc., is the real treasure here, because it's there where most part of people lose their minds and start losing big. And as I've been explaining in other webinars, the whole idea of the contest in Dukascopy, I don't know if this is intended this way, but the thing is that every single competition actually develops some specific skills that you will need to have if you really want to call you a trader, to call yourself a trader, and if you want to reach profitability, you need to have that toolbox of the skills. So we're going to review why, at least the meaning I am giving to the trader contest account, because this applies to reality overall when you're trading live money. So well, this is me. Yeah, my account is $2,500 from $100,000. It is simply incredible how a margin call could simply wipe your account bigger and bigger and bigger exponentially. But even though I'm not in the latest position, that's what is surprising me way more. I'm in 470 and 27th place. But well, the thing is that, yeah, I had again a margin call. thanks to the Central Bank of Mexico that let me down, by the way. A bunch of stupid news that simply came out to the mainstream. They caused the volatility. They put the exactly. I'm going to put it that in the chart to make it even more visual. But the thing is that level that during 1 week and a half, I made it not to be touched. It was touched immediately yesterday, in a snap. So that was like, I was like, oh my god. Well, I'm going to explain a little bit what happened with the Mexican peso. It's a bunch of hype only. But well, the markets, they tend to react not only long term, but short term. And these movements in the short term are only bigger opportunities to buy for the longer ones. We're going to review that trade in specific, because that is the only one that I would really like to comment. And the other, the New Zealand dollar trade, that if you remember, I had open. I commented on a short trade there. It was the only really outstanding one. But unfortunately, with these two margin calls that I have after that, well, it's simply impossible to overcome this account at this moment. Here it says the crash. I was 58 yesterday. Now I don't want to see what happened with you, Mexican yesterday. Yeah, I'm going just to explain it. What do you mean you were 58 yesterday? Ah, okay. I thought 58-year-old. I was like, what? I thought you were younger because of your voice. Okay, on the count as well. Congratulations, my friend. I really couldn't make it at all. I believe during the whole competition, I never was in profits. We're going to review that. Okay, I'm going to close this. This is the monthly. As you can see, yeah, I was in profit like, I believe, 2 hours. And look at that. Okay. So I am 97% in a drawdown. This will hurt me badly in the 6 and 12 month account competition. But the thing is that we need to actually put all this in context. The whole idea of this, first of all, this trading contest is educational, and second, I am looking medium term, not to win one competition, being in the first place, whatever it takes, but have a good performance in the 6 and 12 months. That is what it, in my opinion, what it really counts. If you see a trader having a bad month or a good month, we've been talking about in other webinars. This exact scenario that you, in your real life, in your account, you could have one bad month. You should be able to manage your account in a way that having a bad month simply having a bad month, you need to make it not to mean that you will wipe your account. Okay. So, well, this is the, I believe that this explains itself. Okay. Here I was having very good expectations that the trade in the Mexican peso was going to at least close in 2075 by the end of the month, but of course that won't happen. But this is what I am talking about, putting things in context. This is my performance last month, and this is my drawdown this one. So when you put things in context, everything changes, right? And this has a lesson. In real life, when you're trading a live account, it's not enough that you say you, for example, use a money management. Let's put it that you risk 1% per trade. Imagine that basic. That is not enough, because if you have 100 trades wrong in a span of, let's say, whatever it took you, 1 week, 3 days, 1 month, if you actually make 100 mistakes, you wipe out your account. Like in this case, for example. But putting things in context is, if you are able to have profits in a month, in this case it was pretty much 500% in profit, if I'm not wrong. The last month competition I made almost 500%. The idea is that even if you don't have 500%, let's say that you have a terrific terrific month using your live account and you made 50%. Okay. The next month, what you do is not to use I'm going to risk 1% of my whole account, and if that takes you 100 trades 2 weeks to open them and to close them in a loss, then you wipe out your account, right? You need to put an extra layer of protection to your account. For example, here, I was up to, let's say, 350,000 in profit. So what I did is to risk, let's put it this way, in a live account, you take, let's say, a quarter of your account, 1/3 of your account, and you say, okay, this third of my live account is what I will manage with 1% of risk per trade. And no matter what, I won't be losing more than 1/3 of my account during a month. Let's put it this way. Okay? Because yes, if you see, we have 350. Yeah, it's like 35% of my account. So during a month, I pushed myself to, first of all, not risk and not lose more than, let's say, 1/4, 1/3, 1/10. You decide, and that tenth you divide it in 100 trades of 1%. This is the whole idea. Of course, if you lose your main account in 1 month, you're doomed. But if your main account, you divide it, my strong recommendation is that when you trade a live account, you divide it by 12. Let's say that you have $12,000 in your live account. Okay, what you actually will be risking the most a month is $1,000. That means that you will never ever risk more than $10 per trade. Of course, when you do the numbers, you say, well, and where is the business? Where is really the winning big and living off this? Well, the thing is that you need to have a bigger account. That's the reality. If you don't have a bigger account, you need to start taking huge risks like the ones in the competition. But trading in this competition is like putting a magnifier in the reality of a live trading thing. You magnify it in a way that you see it bigger. What could happen in 1 month? You can actually end your account. This is the lesson. So that is why they have, or at least this is my interpretation. When you see, oh, okay, but the trader account, the trader contest is not the only one. You have plenty others, but besides you have a 6 and a 12-month thing. So the idea is that if you actually lose 100% of your account 1 month, you could actually continue having chances during 6 or 12 months to make a decent performance. And the only way you can do that is to divide your live account in 6 or 12 months and risk 1/10 or 25%, etc., of that account per month. Sorry, 1/12 of your account. So yeah, you could end up losing. If I had 1,200,000 accounts in dollars, actually what I could lose a month, my personal limit, nobody's going to be watching this but you. Imagine that you have a $1,200,000 account. And then you say, okay, I will divide it by 12. So then it goes 100,000. So in that case, imagine you really have a terrible month, but the last month I had a terrific one. At times it happens. Overall, when you are running this kind of risks, I mean, if you really want to run risks high, you need to do this. Because if not, you're doomed. You could have 500 or even 1,000% of profits like last month. People that won 1,000%. But if you lose everything the next month like this, I think that is something that it's very difficult to live with. So for life experience, that is why you divide by 12. At least your account make it live during 1 year. You divide it 12 months, and then you know exactly how much and not more you are willing to risk each month. If you spoil your account in 1 week, you wait till the next month to start. So you need to manage your trading, your lot sizing, your trading activity, to trying to diversify it in all the available trading days, and not losing your whole account in one trade. Okay, so this is the lesson, that in real life, this is more or less how it should look when you have the worst month ever. If you see this, it's not a big deal, but only if you follow the rules. In this case, theoretically, I have $50,000 in balance, so I just lost 100,000. Just 100,000. It's a lot, but at least I do have $250,000, a little bit more, for the next month. This is the logic. This is how you need to play this game. You can win big. You will win big at times, but you will lose at times. The thing is that when you lose, you need to be able to say, okay, this is my bad month. This one. Not saying, this is my good month, and this is my bad month up to here. No. This is the way this should look like. In the 12-month competition, well, this looks much different because I have up to less than $400,000. But well, even here, I still have balance to trade. And so, well, this is relative because, of course, this means that you need to have actually a bigger account than $4,000 initially, etc. But this is only as reference. This only helps you to picture yourself in a situation, in a live account, how you should manage that account. If you want to play it like a trading competition, at least do this. Risk 1/12 of your account during each month. You have 20 available days to trade, and you can open whatever the amount of trades you want a day. And if you need to risk only of your account, you're risking 1%, etc. You make your analysis, you diversify, and you say, okay, I won't spoil. If I have a bad week, I have a weekend to restore, to reestablish, to reset myself, and to start the other week with a clearer mind. This is the way it goes. So, well, this is the only learning thing that I could share with you on this trading competition. Of course, I was really disappointed. I'm going to show you why, because, I mean, the market is always right, because it's the only benchmark that you have. But the thing is that the markets, at times, it reacts in a very wild way. That sometimes it's simply unjustifiable. Like what happened in the Mexican peso trade. I'm going to show you what happened exactly. This is what simply spoiled my strategy to put my account into break-even. If you remember, I opened a long trade here, more or less, I believe, or here. I believe it was here, a bullish trade, with a stop loss here. If that stop loss triggered, my account would have had a margin call, and I would have simply stopped trading the trader account, the trader contest account. So I managed to overcome that level for a lot of days. This is a 4-hour chart. We made it up to here, we made it up to here, we made it up to here, and bang. What happened? First of all, the head of the Central Bank of Mexico was supposed to move, if I'm not wrong, by June or July to the BIS, the Bank of International Settlements. And he was leaving the Central Bank of Mexico, but apparently he will stay up to November. And along with that, it came out a news that as a defensive strategy against the weakness of the overall, of course, they're not saying that in this raw language, but they are, of course, foreseeing that it's simply inevitable that at some point we will have a huge movement again against the peso and the dollar moving up. So they came up with the bright idea that instead of intervening directly the market, things that they've done for a lot of years, spoiling only the money because they didn't fix anything, they said, we are going to use hedging with options up to $25 billion against any kind of wild movement against the Mexican peso. That was it. And this happened. Why? Well, I mean, if the market had to react in some direction, it reacted in the correct direction. But the real thing is what is behind, is okay. In one hand, you are guaranteeing that at least in the aspect of the exchange rate against the dollar, the economy could be protected. But this is not different to what Mexico has been doing these latest years to protect against the dropping of the oil prices, since we still have a big dependency on oil. We buy options, well, the government, up to I don't know how many billions. So that is a way to hedge your risk. This is how enterprises, companies, sophisticated governments do things. This is not different. This is a simple, usual, ordinary, no-brainer strategy to hedge, but instead of hedging against the oil dropping, the oil prices dropping, is hedging against the dollar peso dropping. That's it. But the real thing is, the real meaning is, okay, if you're doing that, it's because you are really foreseeing that something is coming. Because when you have a healthy economy, you simply let your exchange rate float. And that's it. This is a kind of intervention. Instead of being direct, it's indirect. But the thing at the bottom line is, we are, yes, if you buy hedging options, put options on oil, is because you believe that the price will drop. This is like already buying 2,000 billion hedging against the peso devaluation. So it's the same thing, but this sends the real signal to the market that actually what the central bank is expecting to happen. So where in the hell that is good for the Mexican peso that it dropped? But of course, this is the short-term reaction. Here, besides, I've been analyzing that below. This is the 1990, 1980 something. Between the 21 up to the 1950, it's a support region. Let me show you again that. Here it is. I've been saying that the idea is that the market, at least in my opinion, because of all the fundamentals and this confirmation indirectly, the Central Bank of Mexico saying this, in one hand is good, but in the other is what they are really foreseeing for the next months on the Mexican peso exchange rate. So this, the price is what it's doing is testing this support region. We had this breakout after Donald Trump being elected. By the way, the Donald Trump speech has changed a lot. Now, barely said about NAFTA renegotiations, etc. Donald Trump is, I believe, that is making a restructure of the approach of his policies. I don't know, but at least in the short term, the fears are that at least the NAFTA will stay more or less the way it is, and that maybe Donald Trump will try to focus on the wall and deportations to compensate that NAFTA, maybe it will stay the way it is. Because we were talking about last week, or I believe it was on Monday, I don't remember, about the latest good data by the U.S. economy. When you have this kind of data, you cannot simply say, I'm going to experiment, because even though we're having good results, I believe things are wrong, so I'm going to experiment tweaking things and hoping that people will trust that I won't spoil it all. Of course, that is not going to happen. If it's not broken, don't fix it. So the markets and the market forces are going to push Donald Trump to wait, because it's unacceptable that he wants to tweak and to fix something that it's not broken. Okay, so now the volatility against the peso is not in an active mode, but it's in a passive mode. It's a trend. I mean, we've been analyzing for the latest 10, 12, 15 years, the Mexican peso has been devaluating. So if this has no way to change. So after having this breakout, the market is retesting this zone. As you can see, all this zone is a support zone. This is a 1950, and this is a psychological 20. We're just below, but look where it is. So my opinion is anything here is a buying opportunity for maybe if you're foreseeing keeping a trade open 6 months or 12 months. Okay. Why? Why the Central Bank of Mexico came with this idea? Because we simply cannot continue fighting the exchange rate, trying to stop it, because it is simply nonsense. Fortunately, they didn't come up again with a rate hike again, because apparently it's the only game that this guy knows. It's like gambling in a casino, increasing and increasing the interest rate, trying to compensate this, and look what has been the consequence. Has it been worth it? Has it worked at all? Of course not. So this is apparently the last thing the Central Bank of Mexico will do. It's saying we are not going to intervene anymore, the markets, but we will have financial instruments and derivatives to protect up to $25 billion the Mexican economy. Actually, that won't make this price drop, because they are actually not saying we are going to sell dollars and buy pesos. No, we are going to buy call options as an insurance. What they foresee is that this will continue going up. Why at this moment they are coming up with this? Because this is a support zone. At this moment is when they are accepting that that is like a buying here. If you buy a call option here, is because you are expecting that this will go up. It's not coincidence This announcement coming just when the price is retesting the zone. But yeah, bottom line, if you see it passed like 3, 4, 5 days, I don't know. I barely make it here, and I was staying vigilant of my trade, etc. And then in a single boom, it crashed. That is what happened. It's like when you have Ms. Yellen saying something, or the governor of some central bank saying something. If it's completely new or overall unexpected, it's expected to have high volatility. This was completely unexpected. But again, if you're interested in investing, the government is telling you invest, because even though the price could go up, in other words, if they were not sure about this, they wouldn't be coming up with this. They are sure that this will continue going up. But the idea is everybody calm down, because we will have a way to financially hedge the exchange rates. But the price will continue going up. So what I believe here, it's just a matter of time that it will move up. For how long? I don't know. It could take 1 week, it could take 2 months. But basically what I expect is that a price will get to the 21, eventually the 22, and it will continue going up. I mean, look at this. Actually, I don't know why the markets, the most rational way to react on this trade is selling pesos, because they are accepting weakness. Yeah, there is a way to manage it, yes, but at the bottom line is weakness. But well, this is how the market reacts. And yeah, maybe I think I am right, but the thing is that the market decided to move in that direction, and that's it. And we need to be able to cope with that. So yeah, I am sure that this will continue going up, because it's a trend, and the central bank just confirmed Mexican peso weakness. Is the shadow the way to accept the weakness of your currency? To openly say to everybody that, yeah, there is a way to avoid this. But well, let's see what happens. I am really worried about this announcement, actually. I believe that what they are seeing coming in the next months, maybe it's even a massive devaluation. And maybe that is why they are trying to do something like this. But well, this cost me the last margin call, and that is it. After that, I said enough is enough. That's it. Let's focus on gathering energy, focusing on other stuff, and preparing for the next competition. Because simply, even if I work 24 hours a day and I make it very well all the days, I wouldn't even make it to break even. So it simply doesn't worth it anymore. So the other one, and just to close with my trading contest discussion, this trade that I liked the most, this is the Kiwi trade that initially it was wrong. I was wrong longing this. If you remember, I longed it like in here. I was expecting the price to get to the 0.74. It was shy by 20 pips. I didn't take the profits here because of I have a strong stress on the count to put it back to break even. If you realize, if I hadn't been stubbornly trying to put it once in one trade at break even my account, maybe I would be at break even already. But this is what happens when you are trading this kind of competitions. The stress is so high because the competition is so big that if you don't make it quickly, the most likely is that you won't get it to the paid places. But this is a competition with demo money. Never confuse that with the way you need to actually work with your real account, because nobody is chasing you in your real account. At least that's the idea. If you feel that somebody is chasing you or something is chasing you to have amount of success in your live account every month, check out your circumstances, because maybe your circumstances will sabotage you. Meaning, if you open your account with lend money, with a bank loan, or you're risking your whole saving accounts in your trading account, of course you're going to be pushed and feeling to be chased to recover the money in 1 month. And guess what? This is what will happen. Because you are foreseeing at the end of the month, I need to have certain amount of money. But if for some reason the market circumstances don't favor the way you understand the market, the most likely thing is that that month you won't have any profits. You could actually end up in a losing month. But if you stubbornly try to push it, you can actually wipe out your account. That is why you need to have several layers of security of your account. You have your main balance. Then you divide that into 12 months. And then what it's in each month, you divide it to risk no more than 1% of that account. And you divide your 20 days, available days, into 100 trades. Okay? It's like opening five trades a day. If you open 5 trades a day with 1% of your 1/12 of your main account, and you don't do it, and that's your maximum. You need to be able to put yourself limits. And it's very delicate, because since nobody's watching you and you're the complete owner of your account, you can do whatever you want with it. You can over leverage it, you can open trades, you cannot open trades, whatever you want. And fear and greed is where they come up and they sabotage you. I mean, I felt bad about getting, after having almost 500% 1 month and then almost wiping out this account, I feel bad. But it's a demo account. I don't want to imagine, I don't need to imagine it, because I know how it feels to wipe out your account in less than a month. My first live trading account was $10,000 11 years ago, and I lost it in a month. So I know how it feels. But again, bottom line, if in your live account you're feeling this kind of emotions of I need to have certain amount of performance of income a month, maybe trading, your circumstances won't favor your trading. You need to have a different approach to trading. Okay. So, well, again, this was shy. Then here is the bearish, the dovish Central Bank of New Zealand saying stuff on interest rates. My trade was stopped here. It moved down. This is the weekly trending line that I've been talking about. Let me show you how this looks in the weekly, because since this is the last time I will be talking about this trade, maybe it would be nice to remind you how this looks like. This, ladies and gentlemen, this one, this is the 4-hour. Okay? This is the weekly chart. This line is this line. We had during 2 weeks breaking this trend line to the upside, and well, after New Zealand dovish comments, central bank, the market made it below. And if you remember, I've been talking about that actually the market, after reacting this way to the upside, this was the latest very good data, retail data by the United States, if I'm not wrong. And then we had this movement to the upside up to the 72. I was explaining in Monday's webinar or Friday's webinar, I believe, why I believe this happens. This tends to happen, and when you have a main weekly or monthly trend line broken to the upside at some moment, and then the market fading away, you can bet that there are big positions misfooted already. And the way to try to get rid of them at the best price possible, in any case that, for example, you had long trades, imagine, from here and from here and from here, and then you had some trades open here, and then the market does this, then you need to sell, okay? And you need to create a liquidity zone to get rid of your positions as fast as possible and as big as possible. And you need to sell those to somebody. So it is an ordinary tactics and strategy from investment banks and hedge funds and overall clearing banks to inject false liquidity into a price to create a false illusion of demand. For example, here we have a breakout to the downside. We have two tests of this 4-hour chart and then this. I want you again to stress this was to the pip. So when you see this, be aware and be careful, because this means that there were a lot of people shorting here. So when you see something like this happening, overall after having very positive data by the United States economy, that doesn't make any sense. So maybe you are in front of this kind of tactics. What happened? We had an inflow here of capital. It was above the 72. A lot of shorts here were considering putting some kind of a stop losses above 72. So if you have short trades and your trigger is your stop is triggered, you are actually buying. You're taking the opposite side of the trade. If you short, you're buying here. So you need somebody to sell you that money. And that is exactly what the guys that maybe were misfooted at some point is exactly what they want to do. Your stop loss is triggered, you create demand, and they supply to accomplish the demand. So they started selling and selling and selling here. In the intraday, I explained in some other moments. Let me just have a... Here it is. This is a 1-hour chart, New Zealand dollar. This is again the weekly trend line, and this is what really caught my attention. Overall, the 15-minute chart, this looks massive, the volume. Is the highest, okay? So, isn't that a coincidence that just testing a weekly support with huge volume that you have after that this was precisely created to create the illusion that this was a false breakout to the downside and that the market was targeting to the upside. So this is what confirmed me that something really strange was happening in the market. And yeah, after having huge volumes here, just reacting at this support, that means that that demand was not precisely done by people actually buying it. I mean the real volumes. So this was everything that happened above here is not the first time I see this. It's very common overall when you have this kind of setups. They don't happen every day, but when they happen, beware. Remember this setup. Remember this scenario. Don't be patient, because a lot of people believed that, oh my God, even though having that great United States fundamental data, the New Zealand dollar is moving up. Oh, maybe the New Zealand will continue moving up. This is exactly what they wanted us to believe here. And then, boom, boom, boom. I was saying at that moment that my target, I moved my short target because it was to the 71, I believe. Where's the 72? Let me see. Is the 71. My initial target was more or less here, the 71, but I moved it to the 71.35, just here. Look what happened, and then started moving up. Now it's trying to break again this weekly trend line. But this context is completely different now. But I wouldn't rule out that maybe this is happening again. But now maybe we could have some maybe I see somebody in the camera. Hello, Tash or Tash. Well, so I don't know. We need to watch this trade. I don't know if this could replicate what happened here. I see it differently now because overall we're not having the volume inflows that we have here. So yeah, maybe the market is just trying to break again this to the upside. I see it difficult. Apparently, a lot of fears that that the market had when Donald Trump got into power is how crazy stuff he would be likely to impose. Overall, the financial and economic thing, like even ruling out NAFTA, etc. If that could change the Fed approach to monetary policy, but apparently the markets are getting confident and comfortable and starting to get comfortable with Donald Trump's administration, so they are tending to believe that it's most likely that things will continue more or less the same. So the next rate hikes by the Fed are around the corner. So the monetary policies apparently will continue being the same way it was planned. So I see it very difficult that New Zealand dollar could break convincingly to the upside when we need to watch overall what happens surrounding this trend line. So this is everything on my New Zealand dollar trade. Let me just give you the exact wait a second. This is my trade. I planned it to hit the 0.7135 here. Look, just touched it and moved up. So, well, yeah, the only thing that I regret now, if I could call it that way, is maybe not play this competition as conservative as I could. Because I'd be sure that I won't be in this situation now. That is for sure. Maybe I wouldn't be in break even, but maybe I would be above 60,000 or something. So this is kind of the things that maybe only in demo competitions I allow myself these kind of mistakes to make them. But yeah, it was. I mean, this was a very exhausting month, and I made it the worst month ever in my competition. So. Yeah, for the next month, of course, you're going to see a complete overhaul on this kind of stuff. I'm not going to ever try to overcome my accounts to profitability in one trade, etc. Yeah, it was a lot of mistakes after mistake after mistake. The thing that still works for me to be confident on my trading skills, of course, is first the years that I have trading, my live accounts that of course have different results than this. But overall, the competition last month, almost 500% in profit. That is not something that you can get just because of luck. So yeah, the next month is going to be interesting. So for the next days, I will try to focus on some trading setups. Not for the trading competition, of course, but ordinary and normal trading setups that we could evaluate them during the webinar and to share the insights, etc. I would like maybe to blend a little bit the fundamental contest in Dukascopy, the competition, the price action outcome after a fundamental news release, I will try to maybe engage into discussing what I believe in those trades, etc. The conditions of the pair, for example, if it's the yen, the conditions the yen is facing prior to some news release, so you can have maybe an idea if you missed an important trend line, or if it works for you or helps having a second opinion to maybe figure out a trade, try to profit that news, etc. Well, I believe that's what we're going to do in the next days. Before getting again the training competition. But well, I believe it's time to call it a webinar. I would like to thank you, everybody. I see a lot of new people. I see, well, the crash, that is, it's not new, but it's strange that he's around. Thanks for being around. Tah, Nehat, I don't know if I'm pronouncing it right. Thanks, Roca. Thanks for the comment. And thanks, of course, Katerina, for hosting and recording the webinar. Remember that I expect you all tomorrow at the same time, same place. This is Alberto Alvarado. Remember to trade safe, be safe, and bye-bye.